This episode of the Old Dogs REI Network is brought to you by Mino Studio. Mino Studio is a pre- and post-production facility for all of your audio needs. Mino Studio's founder is an accredited audio engineer with top 40 and indie album credits. With over 30 years of music industry experience, Mino Studio can take your podcast from idea to reality. Contact Mino Studio at minostudio777@gmail.com for more information. That's Mino Studio spelled M-E-N-O, minostudio777@gmail.com.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This is a twice-weekly podcast, and if you aren't already a subscriber, go to iTunes and subscribe. Well, I'm here today with a great guy, Carl Withers. He has been very active in real estate investing since 2003. He's been buying, managing, rehabbing multifamily properties through his company, Carlyle Properties Management and Acquisitions, and Withers and Associates, LLC. Carlyle Properties currently is partnered with others in the operations and management of over 2,000 units in South Carolina, Georgia, Florida, Texas, and North Carolina. The average occupancy rate of all his properties is 92.4%. Wow, that's amazing. And Carl also owns Carlyle Properties of Aiken that owns over 100 units of single-family homes and other multifamily complexes in Aiken, South Carolina. Carl's multifamily education was gained through a nationally recognized apartment investor who controls over 8,000 apartments throughout the United States. Carl also has a BS degree in business from Lander University. Well, welcome, Carl. How you doing today?
Hey, Bill, just fine. It's a great day here in South Carolina.
Oh, man, I bet. Is it getting hot out there?
It is steamy.
Same here.
It is steamy. But it's great. I'd like to add to that resume. We opened up a company about 2 years ago, Bedrock Property Solutions. Once we got over 1,500 units, it just made good sense for us to manage our own properties in-house, and saves the investors a lot of money. And we do all of our in-house repositioning and building, contracting, and everything in-house now, which saves quite a bit of money and time.
Now, how do you do that with multiple properties in multiple states like that? Do you, sort of disperse a property manager to the properties themselves? You hire there or hire locally?
Bill, what we have is we have an in-house contractor. Mm-hmm. Our office is in Woodstock, Georgia, mm-hmm. and we're pretty much right in the southeast. and North Carolina, South Carolina, Georgia, and Florida. So we predominantly buy multifamilies that need rehab, and it's a repositioning type deals. So what we'll do, doing our due diligence, is just figure out what all needs to be done to get the property up to the standards that we have, and we'll just bring a team in and fix it as fast as possible, and then get out.
God, that's great. Especially, having that under your control makes such a big difference, I'm sure, as opposed to contracting outside. That's great. Can you just take us back a bit? How did you actually get involved in real estate investing?
That's a good question. Back in, I guess, 2003, I worked for a trucking company. I was a manager for a company called Consolidated Freightways.
Oh, sure.
I've always wanted to get in some kind of business for myself, and I was kind of just fell into it. Back in 2002, right after 9/11, the economy really started to deteriorate, and a lot of manufacturing companies, of course, moved offshore to other countries, to do production. And so a lot of our raw material stuff kind of fell off, and we closed the doors on Labor Day 2002, and I started doing brokerage and stuff like that on the side, and just happened to, I was reading books about real estate and just different franchises. What else did I want to do? It was the only job I've ever had outside of college, but it really gave me the basis in sales, operation, you name it. The transportation business has all kinds of facets in there that I guess, kind of prepared me for real estate. And once I started buying, my goal was to buy 5 houses. I saw probably like a lot of people out there saw intro commercials to oh golly, what's
the Carlton Sheets?
Carlton Sheets.
Everybody
bought the Carlton Sheets promo thing and read through it and stuck it on the shelf, and and then once this happened, it kind of forced my hand to go out and do something. So my goal was to buy 5 houses. At that point in time, interest rates were really low. The market was hot. So I bought 5 houses, $10,000. My goal was to buy them $10,000 under what their appraised value was.
Okay.
So it'd give me a little bit of cushion and some equity. So I did an equity line of credit on our personal house. And so every time I would buy a house, I'd get my equity money back and fix them up and rent them. And, after I bought 5, then I bought 10 and 12, 20, and it just went on. In 1 month, I think I closed 10 houses, which was incredible.
Wow. And you're managing all these yourself too?
Yes. Now, those I personally manage. Those are not managed by my management company.
Sure. This is
but really, I've been real fortunate in that I've had some really good tenants, long-term tenants. And how you keep a tenant happy is you make sure their repairs, their property's safe, clean, and you take care of their maintenance, any maintenance issues. And you put some responsibility back on them as well. So things started changing with the banks. and then I was like, oh man, I'm dead in the water. And I happened to I bought a book, Commercial Real Estate 101.
Mm-hmm.
And I remember this so vividly. I was reading the book about 7 o'clock in the morning out on the beach in Panama City, Florida, reading the book. And then I called out of the blue. I called Dave Lindahl's office. I believe I talked to his mother, and then I talked to one of the other ladies, Jeannie Orlowski. Mm-hmm. And again, like Carlton Cheeks, she wanted to send me all this junk and stuff, and I said, okay, go ahead and send it, and gave her my card. Again, I set this stuff on the shelf for a little while, multifamily, but I read his book, and his book kind of resembled me a little bit, just the way he got into his real estate. But I sent the book back. Attention, Jeannie Orlowski, and she called me back. She took the time out and called me on the phone and asked me what I was doing, and I didn't know what I was doing, and so I just told her. I said, okay, what do you get? Where are you going from here? She goes, well, I'm gonna send this thing back to you, and I want you to be in one of his boot camps. And needless to say, after she sent it back to me, I went to a boot camp, and this was about 6-7 years ago. Mm-hmm. And that whole group has been like family to me. Really stand by what they just don't preach it, they live it. And so I got involved a couple years, it was about a year after I bought all these courses and all this stuff from them. Things started finally clicking. It was a lot to absorb. It's a lot different than single family homes. You get a single family home, it goes unrented. Well, you're not going to pay, how are you going to pay the mortgage? You get an apartment complex, unless you can go down to about 60-70%, and you can still pay the notes and most of your expenses if you buy the property right. And that's what some of the things that are taught with the organization of Dave Lindahl. And so I bought my 5 years ago, I bought my first apartment complex. Not only did I buy one, I bought two. And I was raising money for a 130 unit, and also the other unit was 151 units. So I stayed pretty busy, and a lot of sleepless nights. It's almost like buying your first house.
Right, right.
And so it worked out real well. We closed on both of those apartment complexes. Both of them have actually been sold with nice gains for the investors and everything. But and then it's kind of been a snowball effect. You build relationships with sellers. You build relationships with brokers. You've got, once you close on these things, these guys have a lot of faith in you, and they don't want to bring the seller, a bunch of guys that can't close on a deal. But like I said, it's just it kind of snowballed over the last couple of years. I've gone through. I've got a partner that went through a couple different partners. You don't want a partner that's just like you. You've got to both give and take. He's got some qualities that I don't have, and I guess I've got some qualities he doesn't have. But my partner was actually one of my first investors.
Wow.
It's kind of funny, and I remember the day very vividly. He came down, and this guy was kind of a pain in the butt. He's asking all these questions, which at the time, I was a newbie, and just kind of wing through it. But somehow or another, he had a lot of faith in me, and when I was a newbie, and he invested quite a bit of money in actually 2 deals of mine. But he's paid pretty handsomely for both of those deals as well. Once we went to sell them, and he's like a brother to me now, and I tell him he's always the one that plays the devil's advocate. I find a deal and he gives me a hard time about it. He's like, what's the exit strategy? What's this? We go through all the due diligence, and that's something else that's very important, that you go through the due diligence. You do the due diligence yourself. Don't hire that stuff out, because these people are in and out, and you don't really. I don't think you get they miss a lot of things.
Oh, sure.
So that you would want to know, and it'll cost you, and cost your investors money on for poor due diligence.
Sure.
You're going to find everything. No, you're not. But we've got some standards that we go by. I bring my contractor on site when we do the due diligence. We have a staff of we have a small army that goes in there and pops these things out as quick as we can. We also look for any fines that may have been given to the seller by the city. Any code violations are real important. And also go through their maintenance logs, seeing how many times, they've had to repair sewer lines, or, and another very important thing that can be costly is do they have aluminum wiring?
Yeah.
And nowadays, these things run they run up and down. Sometimes they're insurance companies or the lenders, or they want you to fix these things, and sometimes they're pretty soft on them. I believe it's just the what they're looking for. But that was one of the things that kind of bit us a couple of years ago. We had 40, I think it was about $60,000 to go through and put these pigtails throughout the apartment complex, and we never knew about it, and didn't come up in the due diligence.
Wow.
And it was, all this thing was after we closed. Then the insurance comes back and says, "Hey, you got aluminum wiring," and if they had told us that, that's one of the few things. It's one of the things that they ask you initially. But they didn't come back to us until after we closed, and they said, "Oh, by the way, you got to remediate these the aluminum wiring." And if they had done it beforehand, we would have gone back to the seller and said, "Hey, by the way, it's new code. The lender or the insurance companies won't provide insurance unless this is remediated." It's a couple $100 a unit to fix those. So all goes through your bottom line and adds up.
Was that something you might say was your biggest mistake, or looking at all the properties you've purchased and so forth? Do you have one that really stands out as one that, wow, I really learned from that one?
The biggest mistake was having another company do the due diligence for us. We probably didn't vet them as well as we should, and of course now we do all the due diligence in house. But starting out, for any people that are new at this business, I would ask whoever you're getting to do your due diligence to give you some references.
Now, when you say due diligence, are you talking about the inspector that inspects the building?
Well, it would be before you're buying the property. You typically have you put it in a contract. You typically have about 30 to 60 days to make sure the property is to your satisfaction, and you want to proceed in purchasing the property. And this is going through all the leases. It's going through all of the various contracts that the apartment has with utility bills, just inspecting the whole business side of the apartment, and also going through to see if there's any mold. Mold is another really bad issue that can cost you a lot of money if it's not remediated.
Right.
So I guess my biggest mistake and would have been probably not vetting the property management, not the property management, but the inspectors well enough, that it eventually cost us some extra money on the backside.
Yeah, like something like aluminum wiring. You'd think that'd be something in the inspection report, right up front, because that's pretty significant. So
exactly.
Well, conversely, we're looking at the properties you've purchased too. What would you say is your biggest sort of home run, the biggest success that? Wow, sometimes it turns out better than you even expect going into it.
I was real fortunate, probably, and I can only say it because we're just now starting to sell off some of our properties, which was our first property that we bought. We bought it at a very low price. It was what we classify as a C property, and it was a C property in an A area.
Wow.
And right before we put it on the market, right next door, they started building a shopping center with some high-end stores. And we bought this property at about a 10 cap, and we sold this property for a 4.5 cap. And
wow.
The only thing I didn't like is I wish the property was a lot bigger. It was only 100. It was 131 units, and if it would have been a lot bigger, we would have, of course, made more money. But
of course, a lot of people listening are going, 131 units. That's a lot.
Well, it is, but you'll learn as you go through this. It's just as easy to close on a 200 unit as it is a 100 unit deal. There's the banks are a little bit more receptive, and there's more money out there for everybody to go around, for everybody to cash in on.
Could you elaborate on that a little bit more? Like, you bought it at what, and you sold it at what?
We bought it at what, the cap rate?
No, the purchase price.
Purchase price. We bought it for like $1.1 million, and then we had about $400,000 in rehab that we did, And this is before we also had our own property management company and everything. Sure. And then we sold the property for, we sold the property for, let's see, yes, 20. We doubled our money. We sold it for $3.5 million.
How many years later?
It was a 3-year term.
Wow, that's not bad. That's not a bad deal for 3 years.
No, and the beauty part, I mean, we typically hold these deals for approximately 5 years, 3 to 5 years, with our investors. But that one we had the opportunity, and we had some offers in-house that we just let it go.
Okay, that's a sweet deal. How'd you find that?
It's all about this business is all about networking, and like I said, I've got a few guys I really deal with, and brokers from various companies that bring me my deals, and I had a relationship with one of the brokers that we went fishing with. My passion is recharging my batteries is going fishing, and you got to have that time. And this guy was down in Charleston, and I called him up and told him what we were looking for, what kind of deals we were looking for, and this, that, and the other. And we went fishing. We caught a bunch of fish, of course.
What'd you catch?
We caught what they call redfish.
Oh, yeah.
Or whitetail bass.
Mm-hmm.
And we caught sea trout. Wow. in the inshore fishing. Hmm. So we caught these fish, and before I knew it, he had a deal for me, and we did some haggling back and forth with the seller, and we finally got the deal. And this seller, every time I see him now, he tells me how much money I'm at. There's nothing really a secret in this business, and everybody knows who the players are and stuff. But he always kids me about the property was in disarray, poor management, poor everything. I mean, just bad tenants. And those are some of the things that you look for. Somebody else's junk is somebody else's treasure,
Right.
And this thing was, I called it a little diamond in the rough, and it was. After we fixed it up, after about a year of putting some TLC in it and repositioning the tenants, getting some of the riffraff out, and we put good paying tenants back in there, and then we sold it.
Wow. Great. Well, a lot of people listening, we've got folks that are some are on fixed incomes, or maybe pension, Social Security, and so forth, and limited reserves, and they're a little cautious, about getting into real estate, but they want to. What advice would you give to somebody like that wants to get involved, but really just wants to, doesn't want to throw a lot of money in it right away to get started?
Yeah, that's a great question. My partner, originally when he invested, he had no intentions of flipping that around and being on the other side. And he invested a little bit of money, not only on one deal, but he invested in 2 deals, and he doubled his money on both of these deals. And now, is that going to happen all the time? No, real world thing. But and it can, and you can hit these home runs, and and be sufficient for the rest of your life. And I would just know who you're dealing with. The biggest thing is get references. People. I tell people, first of all, I like them to know a little bit about if they're going to invest in my business, I want them to know have a little bit of education about the business. Mm-hmm. And I think that's only a fair question to ask. You can do it by picking up a book and reading it. And then if you're going to invest with somebody, know who you're investing with. Don't just throw your money away.
Right.
I mean, we've got investors now that, they've invested quite a bit of money with us. And I asked one of the guys, never did call me, never does anything. He just gets a dividend check. And I asked him, I said, listen, you got you're invested in quite a few of our deals. You never call us, and I just want to, let you know I'm here and so forth. And he told me, he said, Carl, he goes, if I can't afford to lose that money, I have no business investing. And he goes, fortunately, you're making me want to invest even more. And, because they've been good deals for him. And, but, that's not the thing for everybody. I mean, people that are on fixed income, my biggest thing is I used to be heavily involved in the stock market until I lost a lot of money. And now everything is in real estate, multifamily. Mm-hmm. We invest in our own deals. It's something that's tangible. It's not just a piece of paper. You can go out and kick the brick wall, or you can go out and see the property. And as long as it's being managed properly, and as long as you have tried to take as much a risk out of the deal as possible, you're going to make money. You're going to make money on these things. Mm-hmm. Apartment complexes, and if you look at a lot of very wealthy people, what do they invest in? They invest in chances are they have apartment complexes. I know several golfers. They have apartment complexes. Professional golfers, and so it's a good investment. I've even had a guy from A.G. Edwards, which is an investment firm. I asked him, I'm in a position now where I kind of can diversify rather than being in all real estate. He told me, he said, Carl, I can't touch the returns that you have. Keep invested in yourself.
That's great. That's great. What kind of returns are your investors usually getting?
They're getting over 7%.
That's great.
On a quarterly basis.
That's great.
And but you do have properties out there that things happen. You have properties that catch fire. You have all kinds of delays with city and government and all the kind of stuff that you hate to hear about. But there's nothing guaranteed about any business. But and if it was easy, everybody would be in it. Mm-hmm. So you've got to do your due diligence, mitigate all the risk, and then once you've done that and you see the vision, then that's when we go to our investors and we tell them why it's a good deal. And but there's always risk.
Sure.
But you go to the stock market, you have absolutely no control. Your broker, when the stock market is about to crash, the broker's not going to call you and say, "Hey, I think we need to bail right now." They're going to, and chances are, I mean, you need to keep your money in there or you will lose it. But versus this business is just it's changed my life and my family's life, and I think it's all my my partners, and we're growing the business, and
what's your plans for your business? What do you see as your future vision for your company?
It's always changing, and we'd like to get to a pretty substantial. I say substantial, but it's one deal or two. It could be one deal or two deals away to the 5,000 unit mark, and just kind of as these things come up, on the 5-year plan, we start selling them and replace them. But 5,000 units is a good manageable unit, which we're also starting to manage third-party companies, other people's property. So I mean, that's just a different avenue that we're moving in. But just growing the business, we're having fun. It's not like work, at least for me. It's not. But we have a good time doing what we do, and we love it. And you kind of, I don't know, this stuff gets in your blood, and you just keep moving forward. That's great.
That's great, Carl. Gosh, we've kind of been running up on our time here. I think again, we could go on here for another hour, I'm sure, but it's good information. I appreciate it. And we're moving into our wrap-up sections now, where I ask you a series of quick questions and get your response here. You ready?
Okay.
All right. Favorite real estate book?
Emerging Real Estate Markets.
Emerging Market. Great. By Lindahl, right?
By Dave Lindahl, sure.
Yeah, I've been hearing that one a lot. Favorite business book? The
Negotiating Game by Chester Press. Because you're always negotiating the deal, Yeah. And you're not negotiating, you're kind of dead in the water.
Mm-hmm. What about the most valuable website that you use for your business?
We use a lot of the economic and development websites. We go into an area, and you of course, you want to know how much competition you have. You want to know what the occupancy rates are in the area, and you want to know how many new developments are going to be going on in the area.
So for like a Charleston or something like that, where would you go to get that information?
You just you go to the Charleston Development Economic Development website.
Okay, so there'd be something.
Just
like
go to their city website, and they should have a tier off on that, and they'll give you all kinds of stats on demographics and demographics, population, and where the population is moving towards.
Great. And our final question here: if, let's say, something catastrophic happened, and let's say you lost everything, but you had $1,000 in the bank, and knowing what you know, what would you do to launch and get back into real estate investing?
What would I do? I would find somebody that is investing and utilizing the people and the relationships that I have to bring something to the table to somebody else that needs some kind of help, that's getting into the market, that's already in the market, that needs a boost in direction or something like that, and I'd be able to contribute by some of the relationships that I have and be able to bring to the table some good deals.
So just to finding the good deals, finding the investors, putting them together, and starting that way.
Yeah, if you've got good deals that are going to bring nice returns, your investors are going to come to you. So, knowledge is king, and also the fact that this is a relationship business. Your word is everything, and credibility is everything.
Well, Carl, this has been a great interview. Thank you so much for the information. You provided some solid information here for people, and I think that's going to be a great help for all of our listeners. And I thank you for taking the time to be here with us. I wanted to find out, too, is how can people get a hold of you or reach you?
Best way is probably texting me or just on the phone. It's Carl Withers, and my phone number is 803-640-3519, or I'm at Carlyle Properties. So that's Carlyle Properties @gmail.com.
Okay, well, thank you so much. And as you know, we're called the Old Dogs REI Network here, and so we always close out every interview with. Now you're a good old Southern boy here, so I know you know what a hound dog does. In fact, I heard him barking in the background while we were talking.
I had all my dogs downstairs. Now I'm a Gamecock fan. I tell you, we're like in the SEC in the Southeast. We're Gamecocks here, and you got Bulldog fans. You got everything, and you got the Florida Gators. So
I love it.
But I don't know.
So
Okay.
so give us your best old hound dog howl.
Ow! Go Cox.
All right.
All right.
Thanks just so much. I can't thank you enough, Carl.
All right. Have a good one. Thank you, Bill. Bye-bye.
Right, you too.
Take care.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.